Well, good morning, everyone. As a matter of introduction, my name is Joshua Clifton. I'm the CFO at the Methodical Group. We are a workforce solutions company that we're going to share a little bit more about what we do and how we provide value to our clients. I'm very excited about the webinar. I'm excited to see some familiar names on the attendees. So thank you so much for taking the time out of your day to attend. It is something we want to keep interactive as much as we can in this venue, in this setting. So we'll see some polling questions throughout the presentation, as well as get a chance to do some Q&A on recession-proofing your business. We'll go through some financial defenses here in a moment to walk through how you can prepare for some of what may be coming down the road in the macro and microeconomic environments. Just a couple of things. I'm going to give folks a few minutes to join. I know the GoToWebinar getting signed up and registered and logged in. Can be a little bit of administrative component to that, so we'll give them a few minutes, and definitely want to keep it interactive in the sense of if you have a question as we're going through, feel free to drop it in the chat or the question box of the GoToWebinar, and we will have time towards the end of the presentation to walk through some of those questions and thoughts and ideas. So with that, we're going to jump right into the presentation itself. Recession-proofing financial defenses. So what that means for your organization and some of the services that we've performed for other clients, we're going to walk through together. With the agenda here being the first defense we'll walk through is optimizing cash flows. And for my accounting friends and CPAs on the phone or the webinar, thinking of this in the sense of operating, investing, and financing cash flows. So we'll look at some of the areas we've seen to be successful, not only here at the Methodical Group, but also what we've provided services to our clients and solutions on optimizing those cash flows. The second defense we'll walk through is reducing costs through automation. So this is an interesting one that I think is more on the front end of cost reduction efforts. I know with the pending recession, and some of it's already hitting certain industries, that is something from a cost-cutting angle. What we've found to be successful internally, as well as providing services to our customers and clients, is cost reduction through automation. And the examples we'll walk through is robotic process automation and how to apply that into a financial operational environment. The third defense we'll go through is workforce solutions and how that can apply to your business. So we actually utilize those services and solutions here internally to Methodical Group, but it's also something we offer to our clients and customers as well. So we will be walking through how can you leverage workforce solutions as you are preparing and providing those financial defenses to get ready today for what may be coming tomorrow. And for those of you who I've worked with in the past or had the experience of working together or collaborating on before, hopefully you know questions, thoughts, ideas. I like this to be collaborative. So again, if you do have any questions or anything in the poll, the interactive poll that we go through that you'd like to learn more about, definitely feel free to either put it in the chat or one of the question boxes. We'll be happy to walk through it together. So with that, I'm going to jump right into the first financial defense. And from cash flow optimization, I've really segregated this into three areas. The first being the cash flow cycle. And what we'll see when we walk through is really the inflows and outflows and some of the solutions that we've put in place internally, as well as offered to our clients to optimize the cash flow cycle itself. The second area, customer and vendor terms. And we'll walk through what some of that looks like as you look at your customer and vendors internally to you. Some of the things we're putting in place today that have helped us as it relates to optimizing cash flow. And then analysis and forecasting, and really this one could be summarized by thinking of visibility into not only the financial performance and operational, it's really part of that visibility and insights into cash forecasting as well as financial reporting forecasting. So from the cash flow cycle, the inflows and collections is really the first stream that I have on here to walk through together. And when you think of the inflows portion of the cash flow cycle, one of the things we found to be successful is revisiting your processes on collections, KPIs, and controls over the cash inflow process. So what that means is you could have a day sales outstanding or some other metric that you're measuring, but it's revisiting that. And not only looking at what the metric is today, what should it be? And then being able to provide some opportunities or solutions to the team internally to say, how do we get it to where we want it to be? And so from the monitoring of the days sales outstanding, that could be a KPI that your organization is monitoring. It's being able to influence that by setting a target. If you're at 30 days and you want to get to a quicker cash flow, it's rethinking how those inflows are coming in. And we'll talk a little bit about that when we look at customer and vendor terms. But it's really having a baseline of where are we at today, where do we want to be with some of these KPIs, and a close monitoring of day sales outstanding is something we found to be effective at identifying some of these slower payers and our customers and being able to interact with them as a good service provider. The last item in the inflows and collections, if this is something your organization is utilizing, the usage of credit, whether it be lines of credit or longer term debt, this is definitely something to do today. Making sure you have those close banking relationships, making sure if you do have these lines of credits or other forms of debt, you're fully fluent in the covenants that are coming. So, most people are familiar, if you're in this space of having that type of debt, you have covenants that you're going to have to report out, making sure you're monitoring and measuring those. A lot of them have quarterly reporting as part of the covenants, but if you do have annual calcs, that is something you want to get in front of today. And the other reason I had it on here was from just a strategic balance sheet management. So in preparing for potentially a recession and recession-proofing your business, those are the conversations you want to have with your banking partners now in the sense of what is the capacity that you have in your line of credit, and how can we either expand, is it the right amount? As you kind of go through your analysis and forecasting, we'll connect there in a moment. Really having that close relationship with the bankers to make sure you're revisiting the capacity you do have of your debt and the utilization of it. From a cash outflows on the other side of the equation for the cash flow cycle, re-looking at those KPIs that matter to the outflows. How is your days payable outstanding and what time frame is it on? The obvious here is if there's a lopsided where maybe your days sales outstanding is at 45 days, but your days payable outstanding is 30. Well, the float there is the obvious. The float of the cash coming in is longer than the time you're taking to pay out, which is not where you want to be. So you want to be in a more optimal situation. But the point here is, and the key takeaway, is making sure you have that data in front of you. Where are you at today? Where do you want to be with some of those KPIs? Because they matter and they can influence the cash flow that you have coming in. The second item under the outflows, the performing a vendor spend analysis. And so this is probably something most of us know. If someone asked you your top 10 vendors, you probably could rattle them off based on spend. But what we're suggesting and done internally as well as perform with our clients is re-looking at that and stratifying the data a little bit different, getting to a more granular level on what are the payment terms for these vendors, as well as what's the last date of negotiation? When have you last revisited this business partnership to determine is this working correctly? And then not only that, but what is the spend by this vendor that we haven't renegotiated? Some areas of opportunity could be very unique to your industry, but you could probably think of many that have a contract basis that may not have been negotiated in the last 2 or 3 years. And it may be time to revisit that, take it up for bid. Those are things that not only can reduce costs and prepare for recession-proofing your business, but it could increase the service, the quality of service that you're getting from the vendor. Moving into customer and vendor terms, this is another area that, in addition to looking at the cash flow cycle, looking at some of the terms of the data that you pull. So I mentioned the customer analysis, the vendor spend analysis. So under the customers, it's really looking at a customer cash receipt analysis. So this could identify, when you stratify that or disaggregate it at a customer level, the speed of payment by customer. And then not only that, what we found to be effective as well, as you're trying to relook at that top line and the cash coming in related to it, it's looking at when's the last time we looked at the price setting or the rate negotiations, bill rates, if you're in a service line, when the last time that was performed by customer. And I think you'll be surprised at when some of those negotiations last happened or when the contracts were signed, because it may yield an opportunity for you to revisit either the pricing of certain products or services or bill rates that you're utilizing in a service environment It's really taking a fresh look at that. So taking a different way of disaggregating the data by other data elements, including speed of payment and the last time those were negotiated. The other thing for customers, if you do identify in that analysis of the customer receipt analysis, some slower payers that you have on your side, this could be something to reach out to them proactively and consider some alternative payment methods. So the P card here, the purchase card, could be an option where, of course, you're going to pay a service fee for that. However, if it's going to speed up the cash coming in, and that's going to make a big enough difference for your cash flow, that may be something to proactively approach some of these customers who are slower payers to see if that's an option for them to be able to pay that method. And other terms could be if it makes sense to have some customers on 15 days. You'd be surprised at the ones who are okay with doing that because they may be paying you from a purchase card, so they've got a float on there already. So you'd be surprised if you revisit some of the terms, maybe you can get a quicker term in your days by utilizing a different payment method with those customers. And then on the other side, the outflows payments to your vendors, it's relooking at those terms as well, because the alternative payment could relate to your payment to those vendors. So an example I'll share is in the purchase card program, whoever you're banking with could walk through this with you if you haven't already adopted these. But that is a way to spread your cash flow out. So by using a purchase card, you could be spreading the payment method in the sense of paying someone today with the card, but it could have a 30-day float on it. So now you've extended the cash outflow from utilizing that purchase card. And some institutions have some pretty good rebates as well. So it is definitely something to consider when you're thinking of how you're paying your vendors. And then revisiting the service level agreements. I briefly mentioned this earlier. When you do the vendor spend analysis, what we found to be successful is looking at what are some of the SLAs for our key partners. Is there a lag in the quality of service that's being performed that doesn't justify maybe an increase that they're sending to us? Potentially looking at rebidding some of those vendor services that may not be lining up from a quality, and then the economics of the dollars may not be making sense either. So until you take a fresh look at that data, looking at the customer spend analysis, your vendor spend, you have the intelligence now to be able to start pinpointing, maybe there's some customers and vendors in here that we can influence or do either payment methods or looking at alternative terms to increase your cash flow cycle. And the last area in cash flow optimization I'll share is analysis and forecasting. And so if you think of this, I mentioned the word visibility earlier, and I do think that's important because what the scenario modeling on the left is, that's most organizations have an FP&A function, and I feel like a lot was learned during COVID-19 where they're much more agile, they're used to producing some fluctuating models as to how will our financial performance look on pick a date, 6 months, 12 months, next month. So I feel like most organizations are able to increase that, but what we've found to be successful in a solution we're providing is looking at scenario modeling. And so that could look like a best case, a most likely, and a worst case versus the standard forecasting of looking out 6 months, providing what it could look like. Providing those 3 scenarios because it helps decision makers, if there is a worst case scenario that's out there, well, it's not only showing the operations or your other business units that information, but it's providing solutions on how could we take, if a worst case does occur, what are the levers we could pull today to help us make sure we're in a position where maybe we still hit our profitability targets or our revenue, whatever your KPIs are. It's being more of a proactive business partner with the operations and those outside of finance by providing these models, but also intelligence of, hey, if you pull a couple levers and you do hit a worst case, you still might get to your number by the end of the year by doing X, Y, Z. So I think being able to be a true business partner with those outside of finance with scenario modeling, that's something we've found to be successful internally and with our clients. And the last item under analysis and forecasting. So here, very interesting to see that I feel like most companies do have a strong FP&A and they may have treasury, and some of those are inside of the same teams. Some of the bigger ones may be separate. But I think it's critical that those 2 areas are talking, because we could do scenario modeling on the FP&A side, reporting out what the forecast is going to look like for our business units. But if we're not connecting to treasury, and I'll go back to the cash flow cycle, if you're on a day sales outstanding of your AR, that's 45 days, but the treasury function is assuming a 30-day, but that's not what actually is occurring. You could have a real breakdown on when your cash flows are going to occur, and then even think of the usage of credit we talked about earlier as well. That could impact not only the capacity, but the usage of that credit. Maybe you're going to be using that sooner than you thought if the FP&A and treasury functions are not synchronized in the cash forecasting scenario model. So I think it's vital when you think through the visibility component that we're thinking not just forecasting, but forecasting and treasury from a cash forecasting scenario. So now that we've kind of walked through Financial Defense 1, we're going to open it up to our first polling question. Let's look at that. So which cash flow optimization strategy are areas of focus for your organization? And we've got some options here. Wait a moment for folks to respond. Okay. Well, thanks for taking the time to do that. I see, super majority. Okay. So enhancing cash flow visibility. I would echo this because that is definitely one, as we've interacted with our clients. I can share an example just this past month where we were introducing some of our services in the sense of accounting and some of the standardized processes of bookkeeping and other elements in the accounting function. But as I was listening to the client, what I heard them say was it wasn't really bookkeeping and accounting services they were really looking for. That was a baseline service offering that they needed. But what they were really looking for was visibility into not only forecasting financial results, but cash flow. So it's interesting that that was where the poll landed because it's very consistent with what we're seeing with our clients and having that visibility. I feel like most organizations may be doing A and B well, but C is definitely one of those, increasing the visibility that most organizations are really looking for today. Okay, Financial Defense 2. So this, recall from the agenda, reducing costs through automation. And this one's intriguing to me because really, if I think of automation, one of the things that stood out was RPA, robotic process automation. And I'll never forget the first time one of the consultants were coming in at another institution, and they were sharing the service offerings of RPA and how it could influence and impact your business. And I just couldn't make the connection. One, I was a little upset. There really wasn't a robot involved. I've added a robot here that I feel like a robot's missing. We got to have a robot somewhere on the slide. So, but my point is, when they walked through it, I could understand what it was, but not how it would impact the financial operations of a business. And so having experienced that now, going through robotic process automation and seeing how what it really does is it eliminates wasteful activity and provides the team members to focus on value-added activities. So some of the cash flow visibility, the cash flow analysis, you could have more team focus on forward-looking than maybe historical or transactional routine. So I've got 3 examples here of how RPA, how robotic process automation can be implemented in your organization to reduce costs. One of those being financial close and accounting process. So in the simplest way, anything that's structured, rules-based workflow could be automated. And for my accounting friends and CPAs on the line, we are masters of moving data back and forth, having these rules-based workflows that we just prefer to have manually. Some of it's just routine and baked into our processes. But one of the things, if you revisit your processes, is looking at what could be automated. And so two of the examples I have on here, so it's routine, high volume, and repetitive tasks. Kind of keep that in mind. And 2 examples I have here, data management and reconciliations. Data management could look like you may be pulling data. If you have an ERP or you have multiple systems, I don't think it's unusual that most financial enterprises have multiple systems they're utilizing for data. Well, you could have a bot in the robotic process automation, a bot be built that will then have its own login to whatever systems you're using. It's agnostic to what systems you have, but it could get a login just like you have a login today. So if that staff accountant is going out and pulling data from one system, either downloading, uploading, or maybe it's generating into an Excel that then is then entered into a different system, the bot could have access rights to both systems, and you could set it whatever time of day to go log in the night before you show up for work in the morning, log in, pull the data, and then log into the next system and put the data where it needs to go. Clearly, interfaces could help with this, but most of those on the phone know that interfaces take time, could be expensive, and some of it may not work with legacy systems. They may just not talk well together. Well, that's a perfect example of where a bot and an RPA process could be implemented to reduce, again, that routine, high volume, repetitive task that maybe the accountants are doing and automate it with a bot having a login access. Reconciliation is another one. It's a necessary control inside of any accounting environment. So I think being able to utilize the bot, the RPA for that would look like the bot may have access to either your fixed asset system if it's not an integrated ERP, or if you think of your simplest cash reconciliation, it could have a view-only access to your banking institution, pull the banking activity for whatever period you tell it. You would essentially create a workflow, a rules-based workflow that would tell the bot, pull it for the beginning of the month to the end of the month, pull that data, give me the cash balance at the end of the period, and then take that data and go log into wherever your reconciliation system is, whether it be Excel or another program, and put in at least that balance per bank. That could be automated, and that's the simplest form of how it could be utilized in a reconciliation environment. So you could easily see how these routine, high volume, repetitive tasks could be replaced with a bot that would have login access to these multiple systems in your financial close and accounting process. I'm going to jump into the payables process, which again is another area that we as accountants and financial folks have really utilized in the past of just having very traditionally manual processes, touching of data multiple times, routing of invoices for approval, and then sending emails, hey, just check it in, making sure this was approved, or if you have any comments. All of that can be automated. So two of the examples I have in here, invoice approvals and matching. You know, there's a standard accounting control where you're looking at PO to receipt to the invoice. That can be automated from having a bot log into whatever your payable system is and performing that matching for you. Some of the more advanced ERPs have it, but not all of them, and this could be automated. So the routing of the approval could also be utilized with a bot providing that routing service by sending it out to wherever it needs to go. And again, it could be rules-based. If you have any invoice over 10,000 goes to X, over 20,000 goes to Y, the bot would be programmed to know who it needs to go to and when. It could also send, you could also have the bot have access to an email, and it could send email reminders to the individuals based on the invoice being approved or not approved. For invoice data entry, another interesting part about the bot that it could get access to, I mentioned Outlook or whatever your email system you're using. It can have access to that to then go in. If you have an accounts payable at yourcompany.com, you could give the bot access to that inbox, and it would go and extract whether it's a PDF invoice or maybe the invoice is in the email body itself. Again, a rules-based workflow that would tell that bot to go get that information and go input it into your payables processing system. Something that, again, we're probably doing a lot of manual touching today that could be replaced by automation that, again, will remove that wasteful time in the activity and move it more towards a value-added activity with your team member. The third area is HR and payroll process. And here, what I think is interesting is for those who are on the phone who work with or collaborate with their HR partners, it's another area just ripe with manual touches. It's full of moving data from one system to another. If you think of performance improvement or performance plans may be in one system where your HRS may be in another and payroll in a different one. Some of the more advanced ERPs have all this connected, but it still doesn't always talk well together. So whether you're doing report out or data management of moving data, downloading, uploading, and where interfaces aren't built, all of that can be automated with an RPA. I think another cool example that's done in more of the beginning of the employee life cycle is where RPA could be utilized to match resumes with your job requirements. So the time that it may take someone on the HR team today to look at those and make sure they match, and then if they do, kind of moves it along into the path of getting to the hiring manager. Any of those elements, again, could be rules-based workflow that a bot could do for that person. So again, minimizing the time of maybe more wasteful or more routine, high volume, repetitive tasks, and having that team member focus on something that's more value added. So hopefully this provided a little bit of insight and a connection as to, sounds great, RPA, but how does it impact my business? Hopefully these examples helped provide some insight into how robotic process automation could be utilized in your business. So with that, we do have a question for the group as it relates to RPA. And we'll open the poll now. So how likely is your organization to implement RPA into its processes? This may be something you've already done. Could be one of those you have budgeted for 23, or maybe it's still one of those, let's learn more together about RPA. So give folks a moment to reply. Okay, yeah, this is interesting. So 50%, you know, RPA is not currently planned, but yeah, like to learn more of the process. That's definitely one I think exploring together in the sense of, and I'm happy to. My contact information will be at the end. Definitely would really appreciate walking through and exploring it further, because I think this is definitely one of those. The offering itself of building a bot, telling a bot what to do, is evolved. And an example I'll share is a lot of the bots that can be built today, it can do the routine tasks I mentioned in those examples, but it also has an element of machine learning in it, which that kind of opens up even more doors. So it's not surprising to see one of those wanting to learn more about that process, because it's a constantly evolving solution that could be really revitalize a financial operational unit. And then, you know, definitely understand they're not likely in that scenario. I know some of that's new. It could be something that, you know, the team feels comfortable with those tasks today, but it is something to consider as you think of what are some more cutting edge ways to cut costs than more of the traditional ways of looking at labor and non-labor costs. Automation can be and should be one of those factors to think through. So really appreciate, you know, folks taking the time to answer that. That's very helpful. Okay, the third, financial defense. So workforce solutions. This is one that we wanted to share as well, in the sense of most people, I think, when they hear workforce solutions or offshoring, it's kind of that traditional labor arbitrage play, in the sense of, you know, reducing a cost by having someone offshore perform a task or a function that used to be done onshore for a cheaper rate. And so we wanted to explore that further and just share some of what we've seen in interacting with our clients, as well as the service offerings that we've found, not only internally to Methodical, as something we utilize, but something we've worked with our clients on. So the first chart here is an example of a workforce solution we designed for one of our clients. So if you think of the left to right, the current in-house tech spend for this particular client was about $1 million. And the agreement we worked with them was we were going to take on approximately half of that. So if you think of the IT environment, system application, system security, all of those major functions, we effectively took on half of the cost of that organization's IT. And what we did was we built a pod, which we'll go through in a moment. So a team of individuals that we managed and synchronized and collaborated that with the client's IT team, and took that on in the sense of a workforce solution that was designed with two objectives in mind: to decrease the costs, to bend the cost curve down, and increase the quality of the service. And as you can see in this example, we're actually able to drive the cost down by that third year, but also to achieve a $200,000 cost reduction, but also increase the quality of the service that was being performed. And the reason this was a very successful outcome is what we've designed here is we have recruiting networks in the Philippines and Brazil and here in the United States. to where we work with our clients and understand what their objectives are for revisiting their workforce solution. So in this particular example, we were able to leverage those offshore and nearshore networks to drive down that cost component, but also the beauty of having the recruiting relationships in those areas, we're able to find the quality staff who are able to perform the services at a higher quality of service rate. And so for this example, I think you could see we were able to do the two objectives this client had, which was bend the cost curve down and increase the quality of service. So a couple of ways we're able to do that through exact search. So think of a traditional staffing model where you may have a direct hire or a contract to hire individual that requires a certain skill set, whether it be accounting, actuarial, whatever that is, or IT related. That's something we were able to do, again, with the network we have here onshore, nearshore in Brazil, and then offshore in the Philippines. We're able to listen to what solution we're trying to achieve together, what the objective is, and then be able to go find that exact resource that you're looking for to perform that function. So exact source is more of that specific skill set you're looking for. Maybe it could be an individual themselves. So the pod that I mentioned on the table on the right that we utilize for this client, it's a pyramid of resources and focused on, what could be structured and flexible. A team, this example we shared was an IT team. And so it's managed by the Methodical Group in conjunction with your IT team. And it's a team of resources that we put together with understanding the objectives of the team at the client of what we're trying to achieve. It could look like a cost reduction. It could look like maybe it's one where there's an important project that requires more time. Well, a way to do that is operating our team in the Philippines to extend that workday for you. So then you have your in the States team working in the hours there, and then also utilizing that offshore concept of a pod who can keep the machine working. So whatever that effort is for that project, it keeps going because of the time zone difference. And then of course we have the benefit of nearshore, where you still get the cost component from our team in the Brazil area by also being in your time zone that you're able to communicate throughout the project in the same time zone as yourself. And then exact ops, so think of this in more of a streamlined, predictable workflows. This could be that accounting function we talked about a little bit earlier for the client we had, where we're able to provide that as well as understanding the objective. If it's something that contract-wise needs to be here in the States, able to do that. But if the objective is from a workforce solution of driving down costs while keeping or increasing the quality of service, that's something else we could explore together as well. What we've done internally as well as with our clients is looking at that nearshore offshore model. So really the key takeaway, whatever unit you're looking at, is really just exploring the different workforce solutions that are out there that could be offered and could achieve the objectives you're trying to achieve, whether it be extending the workday out, looking at the cost curve, bending it down, or increasing the quality of service. This is definitely an option that should be considered as you're thinking of recession-proofing your financial operations and bending that cost curve. So I'm going to pause there. We have one more question for the group, and I really appreciate folks who are responding. I think it's very helpful to just kind of learn from each other on this. So question 3, to reduce workforce costs and increase the quality of services, what workforce solutions would your organization be interested in learning more about? We'll give folks a few minutes to respond. Okay, good. Yeah, definitely something we can help with. Again, for those on the phone I've worked with or known in the past, please feel free to reach out. We can explore it together. I really feel like one of the reasons putting this slide in and that financial defense in here, we've had great success with clients on bending that cost curve. So it is one that you probably would want to walk through together to understand what the objectives are at your particular organization, to see if cost cutting and looking at reducing the cost component but increasing the quality of services. Definitely willing to explore that further. So happy to connect for those who may need more information. Okay, so I indicated, definitely have my contact information on here, but before we go, I did want to kind of walk through some of the questions that have come up as we've walked through this together. So I want to spend a moment to do that. Okay, so the first question I see in here, and this is a good one. Thank you for putting it on here. Regarding cash flows, do you generally see clients using Excel-based models or software to manage cash flow? So, and the typical CPA is coming out of me in the sense of it depends in that sense. But I think it's a great question because one of the things we've seen, maybe some of our smaller clients, is that Excel-based model. And that's something we've helped them in the sense of, if it is something that may not be as complex as having 40 different business units, or an international where you've got foreign currency translation. So some of the more simplified ones can be utilized in an Excel-based model, and it's something we've created with our clients before and utilize as well. So, but there are some softwares out there that can handle that more complex arrangement that I mentioned. And so that's definitely something that if you are interested in exploring, hey, what are some of those more advanced software models that are out there? Happy to connect to kind of walk through. Those are ones that definitely the larger organizations are probably getting more accustomed to now, and some of even the ERPs have some of that. But I still think there's a long way to go because there's so many variables that are in there, and I think you lose some of the flexibility of those maybe softwares that are able to do it, because it's not as nimble as maybe your organization is trying to model out. And that's where, unfortunately, I feel like the Excel could provide that flexibility where it becomes more tailored and specific to you. But there are softwares out there that could help with that. That's a great question. Next question I see is, when my company explored RPA, we found the upfront cash outflow was pretty significant for the immediate benefit. So how do you navigate that cash now versus cash later, or business investment, considering pending economy and other uses for cash? So this is very interesting in the sense of, yeah, it's the traditional, what's the speed of my return, which is one of the reasons I love this question, because every finance person should be asking that. I know if you're like me and seen presentations where there's an ROI presented, my immediate reaction is always like, well, how long is it going to take me to get that? And so in this instance, I do think it's a valid question in the sense of, how do you navigate the cash now versus cash later? And my answer to that would be, one of the earnings calls I was on recently, just looking at a staffing solutions company, and one of the analysts asked him, and I completely agree with it. They asked, so from a cost-cutting measure, what are you doing different as you recession-proof your business? And his answer struck me, and this is how I would answer the question that was asked as well. And he said, we're not going to stop investing in things that are going to provide us data and intelligence that could reduce the wasteful activities in the organization and have them focus on more value. And he wasn't mentioning RPA, but I'm going to use it in this example because I think it's still relevant. His point was, don't stop investing in innovating. And if you can, that's part of that balance sheet, strategic balance sheet management that I mentioned earlier. Maybe it's looking at ways to extend the cash flow, increase your cash inflows, extending cash outflows, or looking at line of credit capacity. So other elements you could utilize and say, we still want to keep investing today, because you are right, there could be a tail in some of these bots, and there is, depending on where you put the bot in your process. So the speed of return can be influenced by where it goes in the organization, but my succinct answer is, I would suggest to keep investing, because you are right, there is a tail on the return of this. But I think if you're really going to get ahead of recession-proofing your business, it's not putting off the investments you can make today to do that. So hopefully that helped, and I totally agree with the question that it can be one of those that happens later rather than sooner, the return. And that's something too, we could explore that further as well, in the sense of, hey, how do we focus our bots and our RPA process on the ones that are going to get us a quicker return? That's something we've done internally and can help with that as well. I think that's all the questions I saw, Robin. Oh, good. Yeah, Michael, I saw your response, so I'm glad that helped. Robin, do you see any other questions?
Yeah, there was one more. Can you clarify the purchase card program you utilize to increase the float in your cash flows?
Okay, I think I heard it, clarifying the purchase card program to increase the float in cash.
Yeah.
Okay. Yeah, happy to help. And most on the phone, you probably already have an established banking relationship, and if it's not something you've utilized before, a purchase card program, I would definitely reach out to them about that. And even if you do have a program, here's some of the thoughts behind that. When I had the program as well, what I would always do is every 3 months, work with your banking partner to say, hey, let's relook at the vendors who are signed up for our purchase card program to then see if some of these bigger spenders are willing to take the card now. Because as I mentioned, they may be on a float themselves where they want a quicker payment. And a purchase card program is a way to do that. So what I've found to be effective is one, making sure you're managing the banking relationship to make that a successful program. And the example I'll share is I previously were using these, what we were able to double the amount of the cash rebate coming back by really taking a fresh look at those vendors every 3 to 6 months and trying to get more new vendors on. They have a process, most major vendors, where they're willing to, most of them are willing to register. Some of them may not be as much, but if you can have a discussion with them that it may increase the float of when they're getting the cash, some of them will get on board. So I would really strongly suggest if you have the program, revisit it with your banking relationship and ask, hey, when's the last time we did a vendor analysis of who signed up and who didn't want to sign up, and can we reach back out to them to see if they will, if you have the relationship. But if you don't, if you're not in the program and you think that cash rebate program with a purchase card may be a benefit to your organization, definitely connect with your banking partner, because they probably have a separate team that manages that than your treasury management, but they'll definitely be able to help walk you through, hey, here's what a model would look like if we went to this. Here's, you'll obviously have to provide a vendor spend analysis to them, but what they'll do is they'll look in their system and say, okay, of your 100 vendors, we already have 60 of these vendors with our other clients who are signed up for the purchase card program, and they're getting rebates from it. So definitely something to explore if you're doing it, managing that banking relationship, and if you're not utilizing purchase card program, reaching out to your bank to explore it further. So great question. Thank you, Robin, for asking that.
And if you have time, we've got one last one. For RPA, who builds and manages the bot?
Oh, good. Yeah, that's an interesting one. Yeah, for folks who may not be as familiar with that RPA, or if you have it, it is one that's important. So what happens is the developer and the designer of the bot, software application type designs, where a company like ourselves or whomever you're utilizing, there's many RPA processors out there. They will work with the client and design the bot based on that, again, the automated workflow that's trying to be modeled to be automated by the bot. And so the design of it is, a company who would design that for you. Methodical has that as well. But the management of it, the login, if you're utilizing an ERP, and the bot's going to get its own login, the management and the system security around that would be the client. They would be responsible for making sure only the bot or maybe an administrator of the bot had access to the login, and then as well, whatever the login protocols you have in your system security environment, you would be managing that internally. So the development is a collaboration being designed by an outsourced company, and then the management of it and system security would be part of the client's responsibility. So great question. Okay, don't see any others. And again, I really appreciate everyone's time. Thank you for keeping it interactive and participating in the polls. That was very helpful for us. And I can't thank folks enough. A lot of familiar names on here, so I really appreciate you taking the time to see the webinar. And hope everyone has a wonderful Thanksgiving. And thank you again for your time. I really appreciate it.